everyone. Welcome to Next Level Humanity podcast. I have a very dear guest here, Ihar Mahanik. Hello. Welcome, Ihar. How are you?
Hi, Nefs. Really glad to be here. I'm well and looking forward to the conversation.
Yeah, same here. I think you are back in New York, right?
Correct.
Yeah,
Yes.
lovely. And you had a nice time probably in Lisbon, like
Oh,
me.
yeah, that was like some time ago already. So I really enjoyed
Yeah.
the Web Summit and all the side events. Yeah.
Yeah, lovely. So, for anyone who doesn't know Ihar, he is the builder of Geek Ventures, and they are doing great. And I'm going to dive deeper into Geek Ventures. But before that, Ihar, your journey started with, technology, startups, and then you ended up in venture investing. What early experiences shaped the way you think about building things and, from the ground up and building companies? And let's start with your own journey as a entrepreneur.
Sure. So, well, if you go really early, a few things that shaped me in the childhood was that my parents were entrepreneurs, and in the 90s in Belarus, where, if you know, since 1991 and the fall of USSR, entrepreneurship was just appearing. Nobody was entrepreneur before 1991, and then suddenly so many people were. So I really observed it as a kid, trying to build something from scratch, new ideas, not following somebody's orders or KPIs, but building your own. And on the second part, I was lucky that I got access to a computer when I was 5 years old, way earlier than a lot of my peers and classmates. And of course, in the very beginning, it was mostly as a toy entertainment and access to video games. But it got me really interested in technology, and then eventually I started coding when I was 12. And it was interesting because I also, around the same time as I started coding when I was 12, I started doing some work for my parents' business, right? So, and obviously I started seeing better how the business works and what's what is needed, what do customers want, right? So what is important. And I didn't go obviously too deep into P&L, but at least I saw how the product had been created. And then based on my programming passion and experience and my proficiency in math, I ended up going for a computer science degree. And that was an interesting thing because I was obviously interested in business entrepreneurship and talking to people and contacts, but from perspective of the degree and of science, computer science fit me the best. But I always was a little bit like kind of in between, right? So, yeah. And then I went
In
to
between
Google.
human relations and then you went to Google, yeah?
Yeah. So I went to Google after I graduated. I moved to Switzerland. And while that was definitely back in 2007, it was the best job a software engineer could have, right? So there was like no question. So, and I was super lucky to have it. I was very happy. But after a few years, it became obvious that that's not enough. Because after all, Google meant specific roles, like software engineer was expected to create code and build. And I was lucky to be in really good teams on search and then maps and ads, working on Android, working on recommendations products. But I also started going to conferences and talk to startup founders and see how businesses are being created, right? And obviously also consuming a lot of information about startup successes and wins like TechCrunch and so on, just, the very early days of tech press, which got me to the point where I started investing as an angel because that was kind of my outlet into the business world. I couldn't affect too much business in Google besides actually creating code, but I could affect business entrepreneurship by supporting the founders that I believed in.
Lovely. And it's very exciting to support the founders and very excited to be in that innovative space, talking to founders and also learning about their journeys, their vision.
Yeah.
And many people stay purely technical, which I meet a lot of people who stay purely technical and or some people stay purely commercial, but you move between both. So when did you realize that you live in that intersection and you can't just be technical and you're more human oriented and you're also very commercial? When did that clarity happen?
I think I'm really like how you put it. It's like three. It's not like two things. It's three things, right? So being very technical, thinking about business, but also working with people. These are like three different sides, right? So, and I started my work obviously from a very technical perspective, right? So my first jobs were all about coding and delivering good technical products. And I think 1 or 2 years in Google, it became obvious to me that at least that I want to add both business and people element. And I think from first days I started to attend conferences. When you attend conferences, you at least get this people element, right? So you get to meet a lot of interesting founders, a lot of building your network. By the way, I also built a big non-business network through at college, so on, through attending a lot of extracurricular events and hobbies. But starting when I was started at Google, I started to attend business conferences, startup conferences, especially in Europe, and just talking to people and learning more about how they do. And that was like, okay, I love building a network, but I also love learning about what they do. And I think it was 2012 when I did my first angel investment. I was lucky that one of my colleagues and friends at Google, his name is Thomas Dubendorfer, he started angel investing a little bit before me, and he taught me like how to do it, because back then there was no access to any like platforms that make it easy, right? So you really needed to go deep into the legal side of things. Thomas ended up creating the biggest Swiss angel community, and he's still leading that. So, but I co-invested in a couple of deals with him, and then I started to look more into, okay, what other deals I could invest in myself. And for me, the end goal was always like, okay, it's exactly had an itch that I couldn't scratch at my full-time job at Google, right? So it's like, I'm meeting all these people, and I could meet people without investing. I could go to conferences, which I did for years. I could go to meetups, but then it's like, it's a question of, identity. If you are coming as an engineer, even high-level engineer from Google, then there's limited type of interaction or limited kind of conversation you would have with founders. But if you come in as an investor, then it opens up a lot of doors, right? And to all angel investors, like advice, like the first 1 or 2 deals are really scary to do, and it's also interesting, like how do you convince the founder to take your money? But a couple deals in, you are officially an angel investor, and now you can at least share something not only from your own lived and worked experience, but you could share what you learned through talking to the founders you invested in. So in one of my first deals, one of the early deals, ended up being PandaDoc. And these are the founders also from Belarus, as I am, who were about like half a year, 1 year into their company, and they were raising their round pre-seed. And I learned about them through online, through friends. I met them, and I realized that these people are really, really promising, really special. They are building something interesting. They understand their customers, and at the same time, the deal was cheaper than what I've heard about the deals at like TechCrunch and so on. And that was because they were exactly the kind of outsider immigrant founders that I'm looking for right now, right? And I was lucky that I ended up investing, and that became one of my best deals. And they also became one of my best friends, the founders of PandaDoc, and contacts. So, for years I've been following their journey from nothing to more than 100 million ARR, from 3 people to several hundred people team, how they grew, how they developed their sales motion, how they built their engineering R&D team, how they evolved their product from 2012, 2013 to 2025, right? So all of that was very interesting. And in parallel to that, when we think about another angle about people, I switched to managing positions and leadership positions in engineering, right? So that was at least very clear path at Google that you could take if you are interested in people aspect. As a manager, you code a little less, you're still expected to code, but now you're responsible for building a team, assembling a team, figure out the conflicts between teammates, promoting team members, hiring, firing people. That is a whole other universe, and that of course is way closer to like leadership roles that C-level people have and founders level have.
Yeah, and you're focused on early stage, and
Yes.
My question is, how did you decide on investing in early stage, and what first drew you toward early stage startups? Because there's a lot of uncertainty, but also it's very exciting. So how did you decide on that? And on top of that, I see that Geek Ventures, I think, is very different than other VCs because you have a great community. And how do you get support from that community? So first question is, what first drew you towards the early stage startups, and how do you get that support
Yeah,
from
I
the
think
community?
it's important to differentiate, right? So my time as an angel investor and my time as a professional VC, and I've been running Geek Ventures VC firm for the last 4.5 years. But as a very early angel, when I was at Geek Ventures, early stage felt like the only way I could come into invest in private markets, and the only way I could actually meet directly the founders. Of course, right now and later, there are so many different ways to participate in private markets, right? So, AngelList, like, vFunder, and so on. And there are so many intermediaries. Of course, you could become LP in a fund, or even private equity fund. You could become LP in a growth fund, right? But the only way to actually collaborate directly with founders is when they are still early. And the interesting thing there is this concept that many of you heard, that the successful people, their strongest relationships are with people they met before they were successful. Mark
Yeah.
Zuckerberg's wife, he met her in college before he had even started Facebook, right? So, and obviously the relationship is very strong, and he trusts her because she wanted to be with him before he became successful, right?
Yeah.
So, and same with all these early stage founders, when they're out there raising their pre-seed round, and you believe in them, and then they become billionaires, right? So the people who believed in them when they were early become their best relationships, right? And if you
Yeah.
try now to invest in SpaceX, you're not gonna be, close relationship with Elon Musk, right? So it's a very interesting angle. It just combines a lot with me
Yeah.
wanting to be really close to seeing how the sausage is made. Also, of course, I had this in my mind that I wouldn't be at Google or Facebook after that, like all my life. I would create something myself. And seeing how this has been created from early days is very, very important. It's very different because obviously
Yeah.
from inside you can see how big companies are evolving, like Google, right?
Exactly. Yeah.
But you want to see how this is done from the early days. So yeah, and of course the unlimited upside drives a lot of excitement as well, right? So when you know that by investing at the ground, and I was always driven to the upside conversation, right? So not to like risk for the risk's sake, but like be patient and waiting for a high reward, high upside.
Yeah, yeah, lovely. And I see that you value human relationships very much because I have been in two events Geek Ventures organized, and I have spoke with a lot of people, and you have a great community, and it takes time to build great communities because I am also a community leader, and I'm fan of community building. So I see that you are building a great community, which is at the end of the day what matters.
Yeah,
Yeah,
and
yeah.
I love communities, and I've always tried. I was lucky to be a member of a angel community in New York when I came to New York in 2013. One of the first things I ended up doing is I joined Empire Angels, which was an angel group of young professionals like myself, and I'm still close with people I met there, and it really helped me and with people from all sorts of parts of life. Of course, I kept in touch with the community of people I knew from Google and Facebook, and in from my angel world to the Geek Ventures, I've always been building a community of entrepreneurs, especially immigrant entrepreneurs in the US. I found that it's important to build a community around something, around some idea, that it can't be just a community of people, right? So with Geek Ventures, we're focusing on founders who immigrated to the US, and we've built a community of great founders that we picked. We had a success to invest, and of course the LPs, the people who decided to support Geek Ventures, many of whom are also immigrants to the US, many of whom are people or everybody of whom support the idea, the mission of immigrants, right? So, and all these people try to help each other. They want to meet, right? So when I speak to our LPs, one of the big angles why they want to be supporter of our fund as opposed to invest in some ETFs or some other, like financial instrument, is that it's a ticket into a community, right? So and this is also why founders, where we see competitive deals, one of the reasons why we are able to win allocation in competitive deals is because of our community. Yeah.
Because of your community. I can see that. And what signals tell you that a product or a team has real depth, and and like what's your secret to choosing the companies or the technical founders you invest in? How do you assess this technical excellence, and how do you
Yeah, that's a good question. And the important thing there is still to focus on people, right? If we are talking about technical, in general, whenever we assess a company, we look at the ability, early stage, we look at their ability to sell and their ability to build, right? So, and I've seen a lot of cases which can excel in one side and attract a lot of investment, but then ultimately fail because they miss the other side, right? So everybody knows the cases of like technical founders that are writing a great solution, but they're not good in like understanding the problem, and they cannot really pitch to the customers, so their revenues become really, really muted, and they end up being acqui-hired. But the opposite side is also like when you have a very, maybe very charismatic sales guy, and they ended up building a solution that's fairly shallow, and they're able to do the first several sales, and some VCs like, oh, they look good, they have traction, they end up investing, and then the growth is limited because the moment they start going actually directly head to head against their competition, the competition wins, right? So it's very
so they can keep,
especially over time, right? Yeah, one thing that all the VCs miss is that the fact that startup was able to win against the competition yesterday doesn't mean that they will be able to win against the competition 2 years from now, because the best competition improves. So, and what I look at is, again, is like, it's not enough to look at the code and, what did you write in the code yesterday? What's important is to look at the people. And this is one of the things that differentiates Geek Ventures from most of VCs, that I talk to technical co-founders in a way that's very similar how, as I was VP of engineering, I hired principal engineers or engineer leaders for myself, right? So it's like I would really talk with them about technical problems, about what they solved in their previous life. Is like what kind of architecture they have, right? So we go deep into architecture. I just had another conversation with the CTO a couple of days ago, and we ended up spending like half an hour whiteboarding the technical architecture of their product. Is like what actually works, right? And when sometimes during whiteboarding or understanding technical architecture, you realize that this is a fairly thin layer on top of the same backends like OpenAI or anything, right, that everybody uses, right? But sometimes you realize that they were smart enough to connect so many data sources, right, and build such impressive technical flywheel of for example, improving their underlying algorithms using trained data that is generated by their customers, right? That you're like, okay, these guys have a real mode. I am now way less positive about pure technical mode compared to 10 years ago, right? So like 10 years ago, company like, I don't know, like Datadog or so on, like that would be like purely on a technical side, would build a mode on complexity of their product, right? So on technical product. Now the modes are not, I mean, of course there's still difference between product that has complex technology and product that's just like vibe coded in 5 minutes. But in the end, the time gap that you win by having a big code base is shrinking from like several years to at most few months. But I'm very interested in technical mode that is based on technical complexity, and that mode is about collecting data, is about improving your data, is about building a proper flywheel where every user you bring into your product improves the experience for everybody else. It's unique workflows that are difficult to repeat, and of course on top of that there's always a product mode that is less of a software engineering, but it's connected. It's more about product design and product management, and software engineers just make it smooth, right?
And you're backing up technically strong founders, so that's your focus. And what's the patterns you have noticed in founders who successfully turn complex technologies into these simple scalable solutions? Like, if there is a pattern?
I think that back to what I said, the biggest pattern is that you always need a strong sales guy and a strong technical guy,
Strong
right? So
technical
it's
coming
not
together.
always,
Yeah.
yeah, it's not always means that there are two co-founders. One is like MBA, one is like CTO. No, sometimes it's one founder and one founding engineer, right? Sometimes it's two people who are both software engineer in their past, but one of them is a little bit more outgoing and more able to do sales, right? So like there are different like sub areas, but in the
Yeah.
early team, you definitely need the skills covered, right? So, and especially we always look at whether CEO can sell, and pretty much every successful company, CEO had some ability, some strong ability to sell. CEO is almost always, if it's a successful company, it's almost always outgoing personality, charismatic, able to pitch, right? Able to formulate their thoughts clearly and in a way that excites and inspires people, right? So, and ability to pitch is directly correlated to ability to sell because in the end, like it's kind of the same skill. And these are the same people who are able to hire really well, right? So
Yeah.
meaning that they
Yeah.
could convince people to drop their job that's like more
Yeah.
secure or safe on
Yeah.
paper and go to an early startup,
Yeah.
right? So this is very important, and it's a very important in the CEO. I much prefer when the CEO has the skills and not like cases where CEO doesn't have the skills and then CEO hires somebody as I don't know
Gotcha.
president or
Yeah.
CRO or like chief
Yeah.
sales guy, right? So
And you talk about that some deeply technical founders are still misunderstood or under-supported by traditional venture capital. Why do you believe that, and how are you going to change that with Geek Ventures?
So let me like kind of challenge you back on that because with Geek Ventures, we our name Geek doesn't necessarily imply that we want to invest in people who cannot sell, who are only technical, right? What I just described,
Both. You want
we want
both.
both, right?
Yeah.
We want
Yeah.
them to be geeky about their area, right? And
Yeah.
it's totally
Yeah.
fine if
Yeah.
CEO cannot code, but they need to be really, really, really
Yeah. Yeah.
deep
Charismatic and
whatever
selling and okay. Okay.
deep into
Great.
what they're selling, and we want them to be a little bit crazy about
Okay.
what they are building and what they're
Their
selling.
own path. So it's like
Yeah.
they're, yeah, a little bit
So what I
about
see
what
is
they
that
are creating and their mission or their vision.
yeah.
Yeah, go ahead.
So in the end, what I think is happening in VC overall is that VC is a by design inefficient market, meaning like that whatever prices you see, they are not established or like valuations. They are not established in a full discovery mode with everybody participating in bidding, right? They are decided in a very small discussions like here's the founder, here's a couple investors, and they decide what the valuation is. And basically, what I found is that this inefficient market brings us to the point when there are insiders and there are outsiders, right? So, and the insiders are, and the founders who are insiders are able to generate huge valuations very early, right? So the obvious examples are like Mira Murati getting $10 billion valuations for her startup, right? So like unconventional, like raising $4.5 billion valuation recently. Those are insiders that know everybody. They are being known by everybody, right? So they can end up generating valuation or a price for their company that's based on everybody knowing them. And the
Yeah.
outsiders, who are actually the majority of founders, do not have access to that. And the outsiders have to deal with the complexities of fundraising, right? With difficulty, right? The typical outsider founder talks to hundreds of VCs before they land anything, right? And they might reach out to hundreds more VCs who will not respond, right? So, and the where I found the niche for us is how can we find the best outsiders and turn them into insiders, right? So, and Immigrant is a great example of outsiders. There are many other examples of outsider founders, not only Immigrants, of course, but and not every immigrant is an outsider as well, right? So, but a lot of immigrants are, and especially recent immigrants who come to the U.S. and don't know anybody, right? And our perfect startup founder are founders who know their business. They're insider to their business. They're insider with their customers. They know how to build their product, but they're outsider in the fundraising world, right? So, and they're at that point, they come to us, they show that they have figured out who to sell to, figure out what to sell to. They just need money, and they couldn't yet figure out how to get access to all those really fancy VCs. But we are talking to them, first of all, because we do respond to cold emails, and we also have such a vast network of outsiders, outsider founders, outsider angel investors, and so on, who refer to us, these other outsider founders. We end up often being their first call or one of the first calls. And when we see that they really have everything figured out, we end up investing early, and typically valuations which are not crazy compared to insider valuations. And after we invest, we help them. And the biggest thing that we can help them is by turning them into insiders, introducing them to all other VCs that would fit them. So we typically would, on a typical company we invest in, we introduce between 50 to 100 different investors, between VCs and angels. And they will end up surrounding themselves with great supporters through these VCs. And then step by step, the founders get to the point when they know hundreds of VCs, and they will get to the point where they have a chance to pitch to tier one VCs as well. So, and this is like the interesting thing. This is the biggest unlock, right, you can do besides, and this is like fairly straightforward, right? So it's much harder to teach a founder how to build a amazing business, right? So, and we are not trying to do that. We are trying to invest in founders who really see how to build a great business. But it's very possible to have a warm introduction with endorsement, with really good introduction for a founder to 100 different VCs, many of whom can help.
And I think that's the future of early stage investing.
Yeah.
It will evolve, and how early stage investors are helping, companies. What beliefs about startups, investing, or technology have you personally outgrown with your journey with Geek Ventures?
That's a good question. So I think one journey that I outgrown, that any low valuation deal is good, right? So a lot of angel investors go through this phase where I've seen several companies at 10, 20 million valuation, so this company comes at 2 or 3, so this must be a good deal. Often it's actually low valuation for a reason, and it never works out. No, not never, but in most cases it doesn't work out. Yeah. And another thing about this good deal is that I also saw some as an angel is this companies that are being in recovery mode, right? So it's we just went through a down round, or we are coming out of this difficulty, right? So, and we now have a new product. So it's now possible to invest at the same terms or cheaper terms than 3 years ago, right? So now it's cheaper deal than before. It's very rarely.
That's not a good signal.
Yeah, definitely not a good signal. But in a lot of cases, if you think about as value investor, you would be drawn to that. But I ended up in that in early stage, there is no value investing. It has to be growth investing only, right? And you also have to outgrow all this instinct to look at the multiples. So it's this company has 500,000 ARR and 10x multiple versus this company has 600k ARR and 20x multiple. Which one is better? This is not how it works, right? So at pre-seed and seed, multiples don't matter. Value investing doesn't matter. What matters is, can these people build a unicorn, and what are the signals? And actually the fact that they've been around for 5-6 years and now are raising a down round is a strong anti-signal, right? So, and so what's important is to think of it always of a growth as a growth investing. This is why, for example, right now at Geek Ventures, we are very squarely focused at young companies, right? So it's and when we see a company that comes to us, we are raising a pre-seed round and we are 5 years old, I'm no, it's that's not for us, right? We want to invest in a pre-seed company that's 3 months old, right? Or at most a year old, right? So because these companies these companies can achieve velocity, right? So, and this is what I want to focus on. For the founders, it's very important to understand that if your company is 5 years old or 6 years old, and you are not already on Series A or more, right? Then you fell off the VC or growth track, and it's hard for you to pitch VCs. You need to probably try to refocus on the value, like PE fundraising.
Yeah. So if you had to distill your philosophy as a builder investor into one principle, what would that be?
Growth.
Growth. Okay.
The word growth is like so over-encompassing. I just used this word when I spoke about investing in growth versus investing in value. But there is also growth about like,
seeing the growth, seeing the
Yeah, but the growth could be like in numbers, but there is a personal growth is very, very important, right? So everybody should, like, for example, me investing in 2025 is very different than me investing in 2013, right?
Sure.
I cannot just go with the same playbook. Okay, yeah, I tell people that I found PandaDoc and Instacart in 2013, but it doesn't mean that in 2025, if a new Instacart clone comes along, I would invest. I shouldn't, right? So it's like I should look for what's important now, and not only from perspective of what kind of product they're building, but what I'm looking for, right? So I also growth in terms of like, can I make sure that Geek Ventures as a firm is growing and better every year through hiring the most amazing people, through improving our offering to the founders and LPs, right? Through increasing quality and quantity of deals that we are looking at, and through making sure that our team, everybody has a growth mindset. Nobody is just doing the same thing they did a year ago. Everybody on my team is doing more than they did a year ago, much more, right? So it's like,
staying
even
updated
though
and
as a VC, we are not as a company, right? So we are not growing. We are not like 50 people. We are now 5 people. But like these 5 people, everybody wears more hats than they were a year ago. And the same, I look at the founders, right? One of the important qualities I look for in a founder is a growth mindset. One of my best founders, every time I talk to him and I ask how are things at his company, he says terrible. And I'm like, what do you mean terrible? Your metrics are great. He's like, no, they're not great enough. I want them more. I'm like, wow, that's what you mean by terrible. Like you're growing 3x year over year, but he's like, that's not enough. I want to grow 10x year over year. So, and similarly, it's like, when this founder is saying, the year ago I was very stupid, now I'm still stupid. Hopefully next year I will be less stupid, right? So it's like, I mean, like, of course, it's a little bit of a funny way to phrase it, and I'm overlooking here. But the idea there is like, not be happy with you, yourself, your company, and always looking how to get better, always move the next milestone higher up. And the only successful founders that get to like $1 billion, $10 billion valuations are those that keep moving the goalposts, right?
Yes,
they're not happy with this, like, oh, we hit million ARR, let's go on vacation, right? So it's like, vacation, 10 million ARR is next one, right? So
it's not enough. So we talked enough about business and Geek Ventures, and we now have the 10 minutes more to go. Let's dive into more personal questions about how you keep yourself balanced, and because it's a truly risky and changing environment, and like how do you keep yourself centered, and what does unplugged mean to you away from all the code bases and pitch decks and constant iteration? How do you center yourself?
That's a good question. So I think it's important to be balanced, and there are several things there. First of all, within work, you need to be balanced by not going down the rabbit hole of only doing the tasks and not being reactive. Right? One of the simpler ways for anybody to work is being reactive, meaning you only respond to what's coming to you, be it tasks or emails and so on. And I have so many emails and WhatsApp messages and Slack messages that if I were only responding to them, I would already be spending 100 hours a week, and that would be my portfolio founders, people I know, and so on. So what's important is to always have periods of time in your work when you're doing something intentional. You're like, okay, the next couple hours, I'm not responding to anybody. I'm thinking what I can do for my business and doing that. That's, for example, a big part of it is actually intentionally writing messages to somebody instead of responding, right? And that could be like emails to great people that I really want to meet or want to hang out, or like following up with people who I want to chat with. It could be strategic thinking. Is like, okay, what are the new approaches we could do, or new thesis that we could invest in, or new even like type of business we could do, right? So like what I can offer my portfolio founders, right? Because in the end, founders ask me things from time to time, but they love the best when I offer them something they didn't ask for that's helpful, right? So be it a webinar with a great guest speaker, or some sort of perk, or introducing them to a great potential partner that they didn't ask me to introduce them to, right?
Yeah.
So to summarize it, it's very important for everybody to carve out time in their work time when they think about how to advance their work goals in a proactive and not reactive way. And I'm being very clear with my team as well that I'm trying to not direct them by giving them 100 tasks. I given them the general understanding, like I want to sync on where we are as a firm and what's important, and they need to be proactive and figure out how to approach it and be inventive. And
So
then, of course, there is a whole part of
Yeah.
like non-work part. But
I mean, what I call what you say is working, instead of working in your business, also working on your business. We need time to work on our business instead of just in our business the whole time, emails. And how about the personal side? How do you stay balanced, and how do you unplug yourself?
yeah, I'm lucky to have a great family and a daughter who is 3 years old. So, a daughter is obviously very unplugged, and this is such a real thing, like, spending time reading to her, or building Lego blocks with her, or explaining to her how the world works, right? So just like a couple days ago, I had a chance together with my dad to teach my daughter first time how to play chess. She's not a great player yet, but at least she understands a little bit, right? So that's obviously
Girls are awesome, and
I
they
get
are
to do
they are this emotional bumps as well. They attract all the energy. Girls are. I have two girls, so they're grown-ups now, but I know the like the energy, emotional bomb running around the house.
Yeah, so that's a big one. So try to spend some focus time with her almost every day, and weekends, of course, personal couple time with my wife, right? So when we are going out, it's very, very important. Not forget that social. I'm very social, so I have a circle of friends who have nothing to do with my work, and we play board games regularly. It's very important. I love board games. Board games is one of the best ways for me to completely unplug, right? So I like playing soccer. So soccer is, by the way, one of the absolute best ways to not be drawn to your phone or anything, because you just can't think of anything when you're physically exhausted.
Right.
I love alpine skiing, right? So anytime you go downhill, it's very real, it's very beautiful. And to me, probably the peak unplugging is Burning Man. I've been 3 times. I'll probably will go again. And if you've never been, the way I mean, everybody experienced it different way. I experienced it. It's 1 week in a completely different world, where your default world, where your real world doesn't matter. And it's amazing, right? So you have a week when you don't think about your work at all, right? So
Amazing. Lovely. And one more question for you. What truth keeps you centered when things go wrong or don't go as planned in startups or in life? Like what's your core truth that keeps you centered and grounded? What do you remind yourself? Because it's kind of like a lesson for anyone who's listening, founders, investors.
That's a good question. Is that I think the important thing that the most important things are in the future. And if something didn't work today or something didn't work yesterday, you still have time, and you have a lot of time to build everything, right? So, and I know quite a few people who lost everything, were at the point where like, okay, I'm 40 and I have zero money, right? And those who were able to think about the future, like, it doesn't matter how old I am, it doesn't matter how much money I am, it doesn't matter how much success I am, it doesn't matter if I have to start from scratch or I don't, like, I still can. It's like everybody can. It's like, and the important thing is that you are always smarter than you are, and have more resources in your head than you had yesterday, or you had a year ago, and you had 10 years ago, right? So it's like, and this is very, very important. If it didn't work now, you have now more resources, meaning experience, pattern matching, connections, whatever, to build something more successful later.
Yeah,
And
I
of
love
course,
that. Yeah.
you have
Looking
more
at the
people.
future and thinking
Yeah.
you have time, you can do it, you can do it again. No matter how many times you fall down, you can still get up and keep on trying. Yeah.
And you have people who support you. This is very
Yeah.
important for me, and
Yeah.
I hope for all of you watching as well. Is like, that no matter how deep you fall down, you still have people that really, really want to support you, really want to help
Yeah.
you, and they will spend their time and effort and energy to help you, and that's
Yeah.
amazing. Right? So, yeah.
Yeah, lovely. Yeah, it's been a lovely conversation. Thank you all very much, and I learned a lot. Great messages. So I have one more question, a final question. If you could leave one message for all founders, deeply technical founders who doubt whether their work will ever be understood or not, what would that be?
Be thoughtful about taking feedback, but take feedback from more people, and don't let feedback make you conformist. One of my best founders, who just recently hit $2 billion valuation, was always saying that you will make much more success by being contrarian, because if you swim upstream, you will end up in the lake where nobody else is. And I think the greatest founders are the founders who are contrarian, but are also listening to feedback and are thoughtful and deliberate about how to be contrarian, and are able to take feedback and to stop things that are not working, but continue unusual things that work. So this balance between being contrarian and conformist. So don't build the same thing as everybody's building, but also don't build crazy thing that nobody needs. Build a contrarian enough thing that's unusual, but also that's needed. Right? So,
Yeah.
Take
Yeah.
feedback from.
Advice. Yeah, take feedback. Yeah, lovely advice. Thank you. Thanks for your time, Ihar. I'm sure our listeners and anybody watching us enjoyed our conversation as much as I did. Any last things to add?
What's important is try. There is no penalty for trying. Reach out, and most importantly, don't be afraid to reach out and talk to people, be it cold or warm, who you think are more successful than you. Because in most cases, people are very open to talk, right? So so don't be afraid to talk to people and to reach out and get to the circles where you feel maybe you don't belong yet, but you will belong there, and come there before you feel fully belonging there.
Yeah, lovely, lovely. Thank you, and thanks to all of our listeners and anybody watching us on YouTube. Thanks again, Ihar, and I will see you in the next episode. Bye, everyone.
Thank you, and thank you all the listeners and viewers.